It's Market Day Report. We're up and trading. Markets have been open nearly 15 minutes here. What about the corn market? Let's start there. And corn still in the red. December 483.5. It's down 6.5. I want to show you something kind of quick here. This is the 5-day look at that December contract for corn. We've come a long way since, the end of the trade on Monday, first part of Tuesday, right? Look how much we've lost here in 5 days. 13 cents or a little over 2.5% of the value in that December corn contract. How about back over, we'll check soybeans. Soybeans have been lower the last 2 sessions, make that now 3. 11.70 on the November, down 5.5. And again, one more quick look at the 5-day on this, and then we'll get through the rest of the quotes here. Now, again, we're not quite as far off on the 5-day based upon where we were trading Friday, but if you could go back to Monday to today, we've had some fairly deep losses of trading up near $12 to where we're trading right now. You know, let's bring him in right now. This is a good place to have Brady Huck, EmpowerAg Trading, Dodge City. I just spur of the moment wanted to throw those 5-day looks at those markets because we've really peeled back quite a bit of the onion here.
Right. Yeah, those markets, they can move fast, and we've seen that this week. So energy markets, they brought us here, and they've proven to have the power to take this market right back from us. So the pause to Project Freedom there yesterday, a couple days ago, that certainly sent crude lower, and the grains have followed. So money flowing in and money flowing out. December trading 20 cents off the Tuesday high, and November beans 30 cents off their Monday high. Unless another story takes hold, you just gotta wonder where this market's going to bottom out at here going forward. Bulls, we need a production problem. We need a demand surge. But good look at those charts, Tony, and where this market has been over the last couple days here.
Okay, let's apply the same thing, but let's go to hard red winter wheat right now. And you look at where we're trading. This has been a weather market, but has weather been trumped now, no pun intended, by what's happening with crude?
Right. We haven't certainly added any bushels, I think, over the last few days. We've got a few decent rains here in wheat country that has helped the pockets that are still have some potential there. Important thing next week is going to be the Kansas Quality Council looking at that wheat tour, and will we get some real world boots on the ground looks at wheat across the state of Kansas? We had Oklahoma's tour last week, and they projected a 50% decline in production in Oklahoma. So Kansas wheat tour starts next week. We'll see what the Kansas crop looks like and get a snapshot of that ahead.
Yeah, good points there. Plus, you've got to think about how much moisture will we have as far as pre-plant moisture for crops that are rolling in right now. Brady, we'll take a quick break here. Back with more markets on Market Day Report. All-time highs last week in cash. Well, we see that this week already, 255, and then some 256 as well in the South. Dressed already 400 this week. We've got more to go. Down $2 though on the June contract here, 251.47. So we have cash so far holding pretty steady. Again, last week cash was 250 to 256, 398 to 405 on the dress basis. So we're kind of holding our own with where we were last week. And live cattle now down $2. Brady Huck, EmpowerAg Trading. What are you watching here?
Yeah, $2 to $3 move in your cattle markets today. That really isn't much of a game changer, I guess. That's just another day's trade here. We've traded and chopped in this range, and that's not out of the norm. Now we talk about $5, $10 moves. Now that's something where we're breaking out and testing an extreme of the trading range. But this week, steady cash or better is expected. Light trade thus far, like you highlighted. I guess what I'm watching going forward is the economic health of the consumer's pocketbook. That remains the biggest question ahead. with energy prices where they're at, giving back a little bit at the pumps with the crude oil breaking and diesel breaking. How long is that going to last? Is that going to that's in favor of the consumer, and anytime you have energy markets breaking and stocks being moving higher. So we'll see where this thing goes. You got cool weather this week. I think that kind of slows the retail beef pull and grilling season kickoff as we get into Mother's Day and maybe some warmer weather. Maybe we'll get boxes moving and people wanting to grill out and eat out more. 389 on your choice cutout yesterday. That's unchanged versus a week ago. We need some warmer weather out there. One thing I'd like to highlight, though, Tony, we got a record number of cattle grading prime right now. 17% of cattle getting killed right now are grading prime. At the same time, we got the fewest number of cattle that are grading select. That's broke below 10%. We're chasing prime. Producers are chasing prime. They're getting paid to chase prime. You see about a $12 bump in the prime cutout versus the choice cutout right now. Seasonally, April through this time of the year, until we get into June, you don't see those big premiums for prime. But as we get into August, September, October, November, you can really see the prime cutout separate from choice, and we can see $60, $90 premiums versus that choice cutout when we get into the fall time frame.
You know, I'm glad you brought that up. Had a chance to talk with Don Close yesterday. Don, a longtime cattle industry analyst, observer, if you will, and an economist. And I asked him about this. I said, you know, this choice to select spread and how it gets inverted, some have been saying that's related to demand pulling back. He said, absolutely not. It's a matter of supply demand. We have very few of the others now. I mean, when you've got the majority in that choice to prime and you don't have a whole lot in select. And so I said, well, what are we using select for? And he said, well, there is a place for it and the demand is still pretty high. So I guess very interesting situation. What does that put you into? What kind of places as a cattleman, if you will?
Right. Yeah. So many of you know, my family sells Angus bulls, and we chase, quality. We want quality, but we also want cows that work out in the pasture too. So I don't think it's going to change. We're still going to chase prime premiums. We're getting paid to do that. But with the tightness in inventory and the lack of cow kills, the strain in the lean beef market, we're importing lean beef. That really skews that select cutout where the round and the chuck primals lift the select and make it be trade a premium to, or at least par with choice.
Yeah. Plus, we're seeing strength over in the cull cow market as well. So very interesting situation. Brady, thanks for dropping in. Thanks for your insight. Brady Huck, EmpowerAg Trading.